Hello everyone and welcome back to Rajput Jain and Associate. In this video, we will discuss about the money one may put in a savings account each year to avoid the income tax notice. So the government has made it essential for the banks, corporations, post offices and NBFCs to provide the statement of financial reporting or the SFT transactions when the transaction in a saving account surpass the prescribed threshold according to tax experts. These activities include cash deposits and withdrawals, stock, debenture, time deposit, mutual fund investments, credit card expenses, foreign exchange purchases, and real estate transactions. Banking businesses are required by law to record cash deposits and withdrawals of Rs 10 lakhs or more in bank accounts other than current or time deposit accounts to the tax department on a regular basis throughout the year as part of SFT. This restriction applies to cash deposit of Rs 10 lakhs or more in one or more account that should be other than a current or a time deposit of a taxpayer in a financial year. This allows the tax officer to inquire further about the source of cash, the nature of the receipt, and whether or not the proper taxes have been paid. Since cash transactions in a bank account totaling Rs 10 lakhs or more in a financial year must be reported to the tax authorities, one must be cautious if they exceed the said prescribed threshold. In case of current accounts, the ceiling is of Rs 50 lakhs or more. Apart from cash transactions, there are a few other types of transactions that one should be aware of. So what exactly is the statement of financial transaction? So under Rule 114E of the Income Tax Rules 1962, every banking firm or cooperative bank that provides bank account services and is subject to the Banking Regulation Act 1949 must record the transaction where, first, a cash deposit of Rs 10 lakh or more in one or more account has been observed of an individual in a particular financial year, or any cash payments totaling Rs 10 lakh or more in a financial year for bank drafts, pay orders, bankers' checks, and prepaid documents issued by the RBI as per Section 18 of the Payment and Settlement Act 2007 are made. Also, certain transactions must be reported by a credit card issuing banking firm, a cooperative bank subject to the Banking Regulation Act 1949, or any other company or organization. These includes a cash payment of Rs 1 lakh or more against a bill raised in relation to one or more credit cards being issued in a financial year. Payment of Rs 10 lakh or more in a financial year by any mechanism other than by cash against a debt raised in respect of one or more credit cards issued. A company or institution that issues bonds or debenture is required to report the receipt of a payment of Rs 10 lakh or more from any person in a financial year for the purpose of purchasing bond or debenture issued by the said institution or company. Next, the company is issuing shares must record the receipt of an amount of Rs 10 lakhs or more from any person for acquiring shares issued by the company in a financial year. According to Section 68 of the Companies Act 2013, a company listed on a recognized stock exchange that purchases its own share must report the buyback of shares totaling Rs 10 lakh or more from any person during a particular financial year. The receipt from any person of a sum of Rs 10 lakh or more in a financial year for acquiring units of one or more mutual fund scheme must be reported by the trustees of the mutual fund or any other person who controls the mutual fund's business. An authorized person as defined in Section 2, subsection C of the Foreign Exchange Management Act 1999 must disclose the proceeds from any person for the sale of foreign currency totaling Rs 10 lakh or more in a financial year. The Inspector General appointed under Section 3 of the Registration Act 1908 or the Registrar or Sub-Registrar being appointed under Section 6 of the said Act must report any person's purchase or sale of immovable property being valued at Rs 30 lakhs or more by a stamp valuation authority referred to under Section 50C of the said Act. Now, how do I file SFT for dividends? So the procedure for submission of SFT on reporting portal is that a statement of financial transaction shall be furnished online through the Income Tax Department reporting portal. The data files are required to be uploaded at the reporting portal through the login credentials of the designated director. Next is, what is Rule 114B? Rule 114B of the Income Tax Rules 1962 require mandatory quoting of PAN in respect of certain transactions for capturing information pertaining to high-value transactions and curbing black money circulation. So this was all about Statement of Financial Transaction. In case of any query, contact Rajput Jain and Associates, or you can also visit our website www.carajput.com. Thank you.